Whew, damn. That was pretty intense yesterday. Anyway, what's up, guys? This video, we're going to basically talk about the outcome of the Fed meeting. I know there's probably been a lot of stuff out there, but I just wanted to do my own, or I wanted to put my own thoughts out there, especially how the Fed meeting is going to affect dollar and consequently gold. I think, needless to say, um, this Fed meeting has basically caused me to, change my bias on the short term. Very, very long term, obviously, I'm still bullish on gold, but I think, needless to say, the result of the Fed meeting was certainly one that probably couldn't have been worse in terms of gold, like, and what it means for gold price. It was Powell really, the way that he, said everything regarding tapering asset purchases and regarding hiking interest rates. It was said in such a way that was almost, obviously bullish for the dollar, right? In the video that I did for um, essentially previewing this meeting, I mentioned that it's really all about hinting. It's not about what they're actually going to do. It's just purely about hinting. And Powell has such a strong pull on the market, given his position in regards to gold, that anything anything that he just even says, he knows how it's going to make the market react. He's not an idiot. So he really said things in a way that was obviously bullish for the dollar, not totally terrible for stocks, and consequently, he almost created like less fear in the market, and that really was the worst possible thing for gold. Anyway, so um, forgive me here because this video is probably going to be a little bit long and rambling. I have a bunch of notes that I've written out, but I just want to kind of go through exactly what were the key takeaways from the Fed meeting. Obviously, what it means for gold price, where gold price could potentially be going now, how now I'm viewing the market. Obviously, needless to say, the short-term bull target of 1960, 1920 is out the window for the time being. It just is what it is. This was always a possibility with the Fed meeting, which is what I outlined in my preview video. Obviously, I was hoping that it was going to be more bullish for gold in the sense that he was going to continue with the transitory inflation talk, and he wasn't going to mention really anything about tapering asset purchases sooner rather than later. He wasn't going to mention two rate hikes, etc. But it went totally against us. And so I'm going to really talk about those things, what I'm looking for in the short term, and how I think you should potentially look at the gold market in the coming days, weeks, and potentially even the next few months. And also, finally, what are kind of some of key lessons, like especially if you're like a beginner trader just getting into gold or not that experienced in trading gold, what are some of the key lessons that we could really take from this event? Because I think, needless to say, probably a lot of people got liquidated yesterday or just lost a shit ton of money. I certainly lost money yesterday because I had a couple positions open, and obviously the market moved against me. The worst thing about these Fed meetings is that they always happen at night for me, so it happens really late, so I can't be watching the press conference live. I only watch the press conference after the fact, like, I watched it earlier this afternoon. But needless to say, my stop losses got triggered on those trades that I did have open, obviously, which were going long because I was still bearish on the dollar. And sometimes that really happens. So it happens to everyone, and I'm not saying I'm an expert trader or anything, but it's just the reality that sometimes, um, an event like this happens, which I knew and which everybody knew could totally change the dollar narrative of bullish or bearish. And he, it probably did for the short term. So what are the key lessons that we'll be able to take away from this event in terms of trading and everything? I want to just go through all of that. So let me just whip out my notes here. So first of all, let's go through what were the key points really from the Fed meeting and Powell's press conference. More than anything, right? It's more to do with Powell's press conference. So 4 key things. The first one is that the Fed expects to raise interest rates sooner than expected, with 2 scheduled rate hikes in 2023. Now, what does that really say? Okay, obviously, from a superficial standpoint, yes, they plan to raise interest rates sooner rather than they expected. But what does it kind of hint at more is the key thing. And what it really hints at more than anything is that I think the inflation numbers that came out, which were obviously higher than expected, um, 2 weeks ago, they it the fact that the Fed came out and actually said that they're planning to schedule rates hikes sooner than they expected really shows that they're a little more concerned about this inflation number than they're giving out. Yes, they're saying things like, oh, the inflation that we're seeing is still, kind of transitory to some extent. A lot of it is coming from certain supply almost phenomenon, like with used cars and the fact that used car prices have gone so high due to supply shortages. All of these different things, but the fact that they are trying to schedule rate hikes sooner than expected just shows you that in reality they are a bit concerned about this and that they do take this inflation threats more seriously than they're coming across. Okay. The way that Powell was saying everything really shows you that he was trying not to freak out the market too much. Okay. By still saying, yeah, transitory, et cetera, et cetera. That's what I mean by that this this event and his press conference was not totally terrible for the stock market. Yes, the stock market's going to take a hit, but he could have come out and said something extremely bearish for the stock market, saying, "Oh, this inflation is very serious." Blah blah blah. No, of course he's not going to do that because he doesn't want the stock market to crash. Of course, he doesn't want to cause something like that. So he's trying to still keep the market calm. And I do expect that while the stock market is probably going to, pull back as a result of this, sooner or later you know, traders are going to realize or investors are going to realize that actually nothing's changed. Interest rates aren't going to raise in the coming year, and asset purchasing is probably not going to happen still anytime soon. So people are still going to take risky investments or risky, they're going to be much more risky with their money in things like the stock market still over the coming months, and the stock market should probably recover. Essentially, he he kind of instilled as little fear as possible into the market. And if anything, then on top of the fact that, which goes to kind of the second key narrative, the U.S. economy is recovering at a better rate than anticipated with vaccinations improving, etc. With this narrative that he's also been pushing, he just kind of said everything in a way that was more like, yeah, we're recovering at a good rate. Yeah, sure. The jobs data is still pretty negative, but we can certainly see it improving, blah, blah, blah. He gave out all his reasons as to why he sees that happening. And yes, inflation numbers were high, but, we're still going to keep interest rates at this very, very low level. We're not going to taper asset purchase anytime soon. So he kind of almost created a feeling of comfort regarding the U.S. economy, right? That's at least what my interpretation was of it. So he almost is causing a situation where the dollar is going to be bullish, but at the same time, still things like the stock market are still probably going to be staying at these certain key levels at these kind of all-time high levels. At least that's the way I interpret it. Let's see what happens, but that's kind of how I see it. Consequently, because he created this narrative with these two narratives, he created an environment of, kind of reducing the fear. It's definitely not good for gold price, but I'll get into that a bit more later. A couple other key points or key narratives that came out from Powell's press conference. One, he mentioned that tapering talk or the tapering of asset purchases, so reducing asset purchases to, to basically shock the money supply. He talked about how that this has become a bigger point of discussion in FOMC meetings, okay, and Fed meetings. And that, again, of course, is a bullish signal for the dollar. again, what does that really mean, right? What does that really mean? I mean, it's almost become a joke. Like he's now like the fact that just the increased discussions of it can cause this kind of effect on the market, right? Just given how bad or how ridiculous some of the money printing essentially has been by the Fed. Look, that's what I mean. This is what I'm saying. Like in terms of the long run, right? The money printing that they've been doing and all of this ridiculous asset purchasing is, I almost think it's to the point where it's way too late for the American economy to ever recover from such drastic economic policies. But but in the short term, when they start just discussing these things, right, saying, "Oh yeah, we're probably going to do the, we're probably going to be reducing, I guess, sort of sooner rather than later." Yes, this is going to cause the price of or the dollar to become bullish and consequently the price of gold to become bearish, right? So that was another thing, or another key narrative. The last key narrative that came out was, again, much more around inflation. He really went into detail about why he still thinks, or why the Fed still thinks, that the inflation numbers are nothing to be super, super worried about, okay? Um, Mentioning, again, the used car prices and using the lumber prices, which has now seen a pullback in price, right? It was at all-time highs and now it's been reduced significantly as of the last few weeks. How he mentioned that the inflation is still a transitory phenomenon and was just, it's not, it's nothing of that's too serious, and it's just something that really needs to be monitored, right? So that was the perfect way to keep investors and traders, at least of the stock market and of other, kind of equities markets, assured that, hey, like, listen, this inflation, don't freak out, right? Don't, like, we don't want a massive sell-off to basically occur. That's what he was trying to do with that, right? Because let's be real, like, when you cut through all the bullshit, disinflation is probably here to stay. Like, just look at all the money printing that's really happened, right? But the point being is that if you're a gold trader, right? I think the key point here is that if you're a gold trader and or a gold investor, and you're kind of counting on this narrative that, like, oh, inflation, like, look at inflation increase and therefore the price of gold is going to go up in the short term, like, that's just, it's almost like a myth. Like, it's a logical fallacy, because that's not what's gonna happen, right? If inflation numbers continue to go up, right, now, because Powell has been talking about, decreasing asset purchases as a result, or, um, raising interest rates sooner rather than later, that's actually going to, like, when now in the future, when there's an increase in the inflation numbers, it's probably going to cause gold to pull back further, because now investors believe, or traders believe, that um, with every increase in inflation, it's going to cause the Fed to want to raise interest rates faster. And they're, like, it almost makes them believe that, oh, the Fed is really going to take action. Do I really think that they're going to take action? Probably not, right? Like, or not very seriously. That's why Powell is smart, because it's really all about, he knows that his words have this kind of effect. So he also knows that if he were really to implement, like, a serious interest rate hike, like, it's going to have a pretty strong effect on the economy, especially on the stock market, etc. So um, we have to understand that. We have to understand the kind of the how would you say it? We have to kind of understand the nature of the current economic situation, that an increase in inflation right now certainly does not mean that gold price is going to go up. There is certainly not a correlation like that right now, right? It's much more to do with fear. And right now, increased inflation numbers actually is not going to cause necessarily fear in the market like that per se. Okay, so that's something we certainly have to understand. Okay. Um, Going back to my notes now. So yeah, the next key thing that I want to really touch on is, what does this really mean for the dollar and for gold, right? Because I think if you've been watching any of my videos on this topic, and just based on how I've been trading over the last few weeks or so, you know that I've been very bearish on the dollar. But especially when it comes to trading gold, right? So like, it's not necessarily that I'm so bullish on gold, but it's also the fact I'm just so bearish on the dollar, and that's why I was really in a position of longing gold. Needless to say, especially as more of like a kind of swing trader or somebody who likes to trade these kind of like, not, you know, I'm bullish on gold in the long term, like as an investor, but I do primarily trade on margin. And the fact of the matter is that right now, with this bias that came out, or sorry, with this narrative that came out now from the Fed meeting, my bias is, at least if I'm trading on margin, is going to have to change, because who knows how far that this is going to definitely pull back the price of gold at this point, right? Um, the reality is that with everything that Powell said, over the coming days, weeks, and potentially next 1 to 3 months, when inflation data comes out, that's probably that we can clearly probably expect is going to be higher than expected. It's going to cause gold to further dump. When we have positive economic data for the U.S., it's going to cause gold to further dump. The reality is that my bias right now has certainly changed as a result of this, right? Of course, um, I want to say something like, well, yeah, but they're printing so much money, it's obviously going to be detrimental for the U.S. economy. And yes, for sure, like that has not like my stance on that has not changed for the long term, and the fact that gold is probably going to break its all-time highs at some point in the future as a result. Okay, but the reality is that right now, just given the way that everything happened yesterday, the short-term bias over the next few weeks certainly has to be one of a bearish nature for gold. And consequently, I'm not going to be looking for longing opportunities anymore. I'm only going to be really looking for shorting opportunities when trying to trade gold. And um, if you're going to try and long this market with the result of what's happened so far, that's going to be tough, like obviously you can try and time a point where eventually it starts coming back again. I do see gold eventually reversing and going back to a more bullish nature sometime soon, but who knows when that's going to happen, right? There is the next big Fed meeting in August, and if anything, that's the Jackson Hole conference, right, by the way, which happens in the late August, right? Um, if anything, what this July meeting has told us is that there's probably going to be some more bullish dollar narratives coming out from that August meeting. So where they may even start setting like actual dates or so for tapering of asset purchases, right? And that's just going to lead to more bearish price movement for gold. So we really need to be aware of this, right? And um, yeah, I mean, I think that I mean, I think that it just is what it is, like this is one of kind of those key lessons that you really need to take from an event like this. And it's just the fact that you cannot let your bias dictate the way that you're opening positions, right? Because actually the market should be dictating your bias, not the other way around, right? So when an event like this happens, I know from my experience that these are events that can really dictate the market and the price movement over the coming weeks and months potentially, just like we saw back in the last one in April 29th, which led to pretty strong bullish price action for gold. Certainly that at least the way that everything has happened, we can certainly expect that this is going to lead to bearish price action for gold, and we need to look for shorting opportunities. It just is what it is, right? Um, we need to also, as a result, right, be paying strong attention to the DXY, right? So now I'm going to start going through some of the charts. I know this video is really long. I already apologize if you've even made it this far, but I just have a lot of thoughts about this, right? So we need to be very aware of the DXY, right now, as we're going to probably see some very strong bullish dollar action, right? If we look at the day chart, what are kind of some some key resistance levels that we could be potentially looking for in terms of gold pushing up, right? Well, first of all, we want to see if we can get over this 200-day here on the DXY, which throughout, the last few years has proven to be very, very strong support when the dollar's bullish, and consequently pretty strong resistance when it's been bearish. So that's the first thing that we want to really look out for. Then at the same time, I think we really want to be looking for the key price levels of 92.5, right? Or the key, not key price levels, but the key levels of 92.5, which proved to be strong, strong support back here, and also strong resistance here. And then if we actually manage to get through that, potentially retesting this high, this relative high back in, yeah, basically in March of 93, right? About 93.4. Those are really the kind of two key levels that I'm or three key levels that I'm looking for. And we need to really monitor that in terms of like how that is going to potentially drive gold price down. At the same time, yields, right? 10-year treasury yields. Now, as you can see, yesterday we got that really strong daily candle on the yields. I fully expect this to continue to rise over the coming weeks. And we know that, if anything, there's a very strong inverse relationship here between yields and the price of gold. So we need to be monitoring this chart, because any talk or any hint at interest rate hikes are naturally going to lead to these yield percentages to increase. And we just need to be very, very aware of this chart, right? And understand that, especially if you're going to try and long, right? If you're going to try and long gold during this times, which I highly do not recommend, that you need to be aware of like key levels, because sooner or later, if you're not being aware of key levels on the yields chart, man, price could really go against you if yields decides to go up, right? Very, very, very important to remember over the next few weeks and potentially few months. Okay. So one thing I really want to say is that during these times as well, when it comes to gold, right, you need to really think, are you a trader or an investor? Because if you're an investor, right, and as I just mentioned previously, I'm still very, very long term, I'm still bullish on gold. I just do not believe that what the Fed has done, right? The monetary policy that's been implemented throughout the last year and a half due to the pandemic, right? And even before this, what has been done, I believe the damage is almost irreversible, right? The value of the dollar ultimately is going to sooner or later continue to go down and down and down and down. And consequently, especially with inflation, gold is just going to increase in value. However, you cannot deny the short-term trend reversal right now, right? And by short term, I mean the next few weeks or potentially few months. What the Fed has done was very well executed, in the sense that they've really, managed in a good way for the U.S. economy to, you know, essentially restore faith in the dollar and reduce fear among investors and traders. And that is just not great for gold price, right? So as a trader, you have to really understand that you can't, you have to in times like this, or with events like this, you have to really rethink your position. And the meeting and the press conference yesterday and everything has really made me personally think that we're probably in store for you know a period of longer bearish price action, and it is what it is. But so you have to really ask yourself, what are you, an investor or a trader? If you're an investor, this is certainly a great time to continue to buy dips. If you're trying to dollar cost average throughout this for gold, man, go for it. This is definitely the time, in my opinion. You can continue doing this all the way down, right? So long as you're a long-term investor. But if you're really trying to trade or do swing trades, or kind of these more position style trades, with some margin, understand where we are and understand the risk you're taking if you're trying to time the market to go back up, because that's definitely risky. Okay. All right. So let's quickly take a look at some of the technicals as well. So what are really the kind of key levels that I'm looking for next in terms of support levels that we could reach at in terms of the bearish price action? Let me go to the hour chart. So, so as I mentioned, I stopped out of my long positions over here, took a loss, and I did actually open some short positions around 1820, 1825, which I'm now obviously doing pretty well on. I'll probably close those positions later today. That's because I've done pretty well. But what are kind of like the key levels that you're really looking for now, um, in terms of the coming days or weeks, right? Um, I think needless to say, we're probably going to see at least a few weeks in the 1700s. Um, I'm not sure if we're going to go lower than that. I mean, we really have to see how price moves as a result, and how, how over the coming days, investors and traders are really going to take in the news, or take in this key event. But I think really there's two key sort of in key price levels that I'm looking at in between 1800 and, 1750. The first one being, I haven't actually drawn it out yet. I'll just do a line for now. It's this level around 1775, which, if you remember on the way up, was actually pretty strong kind of, support, resistance, etc. And then more importantly, this kind of 1760 level, where if on the hour chart, let's actually go to the 4-hour chart. If you look at the 4-hour chart, it really proved to be resistance at one point and also key support here. So that's kind of actually the short-term price target I really have in mind. And I'm just kind of going to be looking for um, trades over the coming days and weeks where, I see a pullback, and just knowing now the bias of the market, I'm going to try and really enter into positions where I see a pullback. So for example, if we actually get rejected at this 1800 level again, where we had that rejection yesterday, right, when we saw that huge dump. If we get rejected here again, I'm going to see if I can potentially get in at, 1810, some point between 1810 and 1820 again, to ride that back down. And potentially, if we see a break as well, if we see something where we go like this, right, break down, and then make that resistance again, make that 1800 resistance again, certainly I'd be looking to open another trade position here at 1800 to ride that potentially down to 1775 or 1760. Those are the kind of the trades and levels I'm really looking at. But again, you have to kind of interpret the news for yourself and see where you are personally comfortable to potentially open a trade, right? This is just kind of what I'm looking at. Um, and let's see what happens over the coming days. Okay. Um, so last thing that I really want to talk about in the video are kind of the key lessons that I hope, rather, that any beginners who are watching this video really take away from this event in terms of trading gold. Um, and just, if, yeah, I mean, with that crazy price action that you can really get on gold, right? And the first one is that, okay, look, these FOMC meetings, I mean, I did that video for a reason. I did the video previewing it and mentioning how important it was, because it is really true. Like, you could say arguably there's nothing else in the market apart from like a crazy, let's say, black swan event, like the day that the pandemic really started, all that news started really coming out, or some crazy war. Apart from those types of black swan events, nothing moves the market and the gold market more than these Fed meetings, and these interest rate meetings, and these monetary policy meetings. Fundamentals drive these markets. I don't care what anybody says. Like, yes, you can be a technical trader, don't get me wrong, but ultimately, fundamentals are what really, really drive longer term biases in this market in terms of bullish or bearish price action. And you need to be aware. If you're going to try and play news during a Fed meeting, this is a lesson for beginners. You're just purely gambling your money, because nobody really knows what's going to happen. It doesn't matter what media sources say or whatever. You're gambling your money. So be prepared to take a loss, because you might as well just go to the casino, at that point, right? So that's really lesson number one. Lesson number two that I have written down here is, yes, again, if this event shows anything, you need to have some form of stop loss, okay? I'm not somebody who necessarily advocates for you to have an automated stop loss set all the time. I believe stop losses, if you're disciplined enough, can be mental, right? Like I didn't actually have an automated stop loss set, but when I saw how obviously price had gone against my trade, I just knew straight away. Like I just knew, okay, yeah, this is it. Like I'm cutting my loss, and I took the hit. So you need to have some form of stop loss. How you choose to play is totally up to you, but I don't believe that there's any way that you should be playing without some form of stop loss in place, right? That you need to like strictly follow. Okay, you need to be disciplined about that. So that's lesson number 2 for beginners. And the last thing is, again, I want to reiterate this fact. I mentioned this once before at more at the beginning of the video. You cannot die by your bias. What that means, again, is that, like I just said, right, for the last few weeks or even months, I was very, very bullish on gold, okay, and very, very bearish on the dollar. But just because I was bullish on gold, now especially after what just happened, I can't just continue to say, well, I'm actually bullish on gold and blah, 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 and come up with all of these logical reasons as to, why I should still be bullish on gold and potentially hold those losing positions, right? But the reality is again, your bias shouldn't be determining again, your bias does not determine the market, but rather you need to look at the market and see what the market is telling you to determine your bias, right? And this was a perfect example of that. Yes, news is going to go against you sometimes. It just is what it is, especially if you're holding positions open for multiple days. So you almost need to be humble in the sense that you need to let the market tell you where price is going, right? Don't expect the market to follow always how you think that everything is going to play out. Because if you do, that's where you can get really, really fucked. Anyway, that's kind of everything that I wanted to say, I think. Sorry for this super, super long video and for me just rambling. I hope somebody finds some sort of value in this video. I just really wanted to put my thoughts out there, and the way that I recorded this was almost kind of like a stream. But obviously the event yesterday was really, really significant for gold price. And yeah, hopefully this video provides some sort of value to somebody out there. If you like this video, please consider giving it a thumbs up. I'll try and do more content for gold over the coming days. I really wanted to do a video earlier, but I was just really busy, and hopefully this will help you with your trades now over the coming days and weeks. Thanks, guys.